Everybody, it's Mark Iggy. Welcome back to another weekly stock market update. We finally had some good news in that the market has recovered off of its crazy week 2 weeks ago with the Japanese yen carry trade unwinding and all that kind of stuff. So we are doing way better. Hopefully you are doing better. And this has been kind of that market that you don't want to put your foot in because you might get burned or it might freeze your toes off. You're just not sure which way it's going. But today it's turning green, and I'm going to show you what that looks like. Because the market is quite interesting right now. And, with the Fed doing its thing, everybody thinks the market's going to go up, and it probably will. I just don't think it's going to go up as much as everybody thinks, like as fast as everybody thinks. But I can tell you this action in the market, look at this, it's like 7 out of 10 days have gone up, and we are, 4 green lights. So we're a green market. We got a crossover. We got all kinds of good stuff. The high momentum indicator going on. We got quite a crazy market going on, and it's overall it's pretty good. So let's take a look at the NASDAQ. Now the NASDAQ is interesting, right? It bounced off the 200-day moving average at just a little bit more than the 200-day moving average, and it recovered that same day, and then it's gone up, and today it's just slightly over the 50-day moving average. Now that would normally portend that it's going to kind of trade between that, and in fact it could actually go and make an extension of that down to about 14.5, 14.6. That's the way I see the short-term trend. The long-term trend, I see it up at about 19.1. So this could continue up there. 19.1's good, but it's not that good off of this point. So you've got to watch out and see what's going on. I don't know how much strength we get going into it, probably because everybody's been expecting it all in here. We're expecting the Fed all year to be raising, and so this market's been going up in anticipation of that. So I don't see as much strength in the NASDAQ as most people do because, the stocks have all recovered really well over the last couple of weeks. But like, how much is there left in this? I think there's going to be a rotation out of the NASDAQ stocks, maybe into something else. But let's take a look at some of those other things. You can see the S&P 500 had a similar thing. Didn't go down to the 200-day moving average here, but it's nicely above the 50-day moving average. I just would love to see a little bit more volume on that to give us more certainty. But nonetheless, it's headed for that 56.69. I think that's definitely in reach. And if all the markets start to move up now that we're green, that's chances are that they're going to do that, then that's a good thing. The Dow Jones looks very similar, but it's way above its 50-day moving average, and it's heading probably for that $41,000 level all-time high. So that's really good. And the one that we just looked at was the New York Stock Exchange. Of course, it looks good too, and it's not very far away from its 18,841 all-time high. And you're seeing a couple of highs in here that it'll probably take out. These are not very high volume highs. This was a pretty good volume high, but anyway, it's heading up for that. We've got a nice recovery off the bottom, and so I like that. The VIX did something this week that has never been done before. It's kind of been a historical week for the VIX, and you can look at that chart and you know that something's up, right? Like Bill and Ted in their Exit Adventure would say, strange things are afoot at the Circle K, dude. And when you look at this chart, you'd go, strange things are afoot on the VIX. So it spiked up to a biggest one-day range height from like 20 to 65. It's never done that before. And then it had the biggest correction. Look where it is. It's back down to like 1478. What a huge correction for the VIX, the panic index. So the panic index went way up, and now it's back to its mean, which is the way you read this anyway. So it's back to a normal level, but man, you had to go through all of this to be able to withstand, this crazy last couple of weeks. The VIX. All right, Apple. Let's do a couple of our ones that a lot of people I know own, a lot of people in our program own. I'm going to go to the weeklies and just kind of show you what I see. We had this triple top breakout, right? And if you follow my channel at all, you know that I talked about this breakout at $200. And I said, I think the breakout was going to go to 230 to 235, maybe 240. It went to 237. Okay, that was the all-time high. It bounced off of that. It corrected down to the $200 level just briefly, and now it's back up to 226. What's going on? Where is Apple going? Well, the way I read the chart is Apple's got a relative strength rating of 88, which is pretty darn good. And it's really close to this $234, $237 breakout level. It's only 10 points away from it, actually. And you can see it did 10 points this week. So it can easily get there next week. I don't think it's going to get there in a week now that it's done its little up move, but I think it's gearing up for its September release of its iPhone 16 and whatever else Apple releases. And I think they're in for a pretty good upgrade cycle here. So I think you're looking at Apple probably extending this thing up to maybe 260, 270. But, you know, Apple is one of those strong stocks that even when it corrects like it did, it goes back up. All right, let's take a look at NVIDIA. So many people I know are trading NVIDIA. NVIDIA has earnings coming up. So I want you to be really, really careful coming into earnings because this stock could go up $20 and it could go down $20 or maybe even $30 in a day. And so if you're like hoping it's moving one way or the other, you could get absolutely hammered. And you can see this stock has moved up $20 and it hasn't even been earnings week. And it's bounced above the 50. It's doing some healthy things. I'd like to see more volume, I have to say, for us to really feel good about this bounce above the 120 level. But nonetheless, it is there. Now, if you are playing this into earnings, I would recommend that you figure out a way to protect yourself. Buy some puts, sell some deep in the money calls, go to cash. You know, this is not a stock to be messing with, right? It's paying huge amount of juice if you're doing covered calls on it. But I don't think this is a stock that you want to mess with going into earnings. You know, let the other weeks be the weeks that make your money on NVIDIA. I know a lot of people in our program made like 5-6% this week on NVIDIA, and the same thing is setting up for next week. Just be sure that you know what you're doing going to earnings because sometimes when they correct for a long time. Let me give you an example of that. This is a stock that when it corrected, everybody thought Peloton was going to be the greatest thing since sliced bread, except for maybe me. My sister was like, "Oh, this is the greatest thing. You get to ride on this bike," and I'm like, they're selling hardware. They're getting you to subscribe. What happens when everybody goes back to work? And this is what happens. The stock slides like this. So, you know, everybody did great for a while, you know, and it made a lot of sense. A ton of people made a lot of money in it. But this stock had corrections and it just technically broke down and, you know, went from 180 to $3. So you don't want that to be, you know, we don't want to be NVIDIA right in here thinking everything is great, and then all of a sudden everything slides forever. I doubt that's going to happen with NVIDIA. It's technology, it's the future, it's AI. I don't think it's going to happen. But listen, I've got to show you both sides because trust me, I've been on the bad end of some trades, and it's not fun. And so I want you to prevent that. All right, let's look at Tesla. Speaking of rough trades, this has been a rough trade for me and a lot of people for the last few years. Hopefully you can learn from it, but look at how it's kind of reared its ugly head above that little trend line down. You could see this week has been a good week, not on great volume, but back above the 50 and back above the 200-day moving average. So that's good for Tesla. Remember this CrowdStrike thing? I keep wanting to talk about it every week. It's finally doing a bounce. You can see it had a correction from 400 to 200, so it got cut in half, and now it's making a little, it's way up to a decent little bounce. Now, the volume is horrible on the bounce, so that means a lot of people don't believe in the bounce. It could go up to 300, which is a 50% Fibonacci retracement. I think you're probably looking at maybe less than that because of this volume. And I think this stock has the potential for going down to, I don't know, something like that. And so you don't want to be trying to catch this falling knife. A lot of people are asking me if they should catch it. And I've been telling them, even down here, I'm like, don't try to pick the bottom. You don't know when the bottom is. A lot of people ask me at 300, they ask me at 320, they ask me at 280. I'm like, you don't know where the bottom is. And I've seen stocks do what I just showed you with Peloton based on this pattern right here, where it just keeps going down. It has a little dead cat bounce on no volume, and then the stock heads lower before it actually bottoms. So I don't want to see you get burned. So just be careful with CrowdStrike. One stock that you may want to look at, and I'll leave you with this one, is Meta. Meta is right at a breakout spot on the chart. And so, you know, this is, I believe in breakouts and I believe in selling covered calls. Those are the two things that I do pretty consistently and teach other people how to do. And you can see there's a consolidation going on here, and there's a breakout right around this spot, you know, somewhere in here, probably going to be more like, let's be accurate here, probably about a $543 breakout point. But notice how this is an all-time high, right? There is nobody selling before this, right? It's never reached that high. And stocks that go high continue to go higher usually. You can see the relative strength rating. And if you're one of those people that's like, oh man, the stock is really extended, it was at 100 and now it's at 340, I can't buy it now. Well, you sure wish you did it, when it's 529. So these stocks have a tendency to go higher. The risk is that this has gone high for a long time. And so when it's in a later stage base, it's in a third stage base here. So it's gone up, consolidated, gone up, consolidated, gone up, consolidated. Third stage bases and later tend to not be successful. I don't know if they're going up or down. I just try to play the probabilities, and I'm just trying to read the charts for you like I read them for myself. Maybe I do a better job actually for you, because there's always emotion when you trade for yourself. So I know I covered a lot. That was a lot. But I want to thank you for being here. If you haven't subscribed to the channel, wherever you're watching this, please subscribe and like, and maybe even give me a comment. I like comments, and I always answer comments when I see them. Also, I have a newsletter called Insider Tips. So there should be a link in below. You can go to cashflowmachine.io/tips to sign up for that. It's a free newsletter, and you find out some of the stuff when it's breaking, and you get a lot of content in one email. And if you like it, maybe it'll help you. Listen, this is always research and education, and not financial investment advice. So don't be going running, clicking mouses and buying things without doing your homework. I just want to alert you, though, we are in the first beginnings of the green market. So this is the time to be a little bit more probabilistically aggressive. Let's just put it that way. Listen, have a great weekend. Thanks for joining me, and I'll see you next week on the weekly update. And thanks for being here. Bye.